All right, welcome back to another edition of Financial Accounting. This is the last edition of Financial Accounting. So welcome back to the final edition of Financial Accounting. I am going to go through a set of review notes for the final exam. Your guys' final exam is coming up here in about a week. Let's take a look at the calendar quickly here. So you guys are section 006. So please make a note that you guys are having your final exam next Tuesday, May 11th. At 7:30 a.m. Again, don't shoot the messenger. I will be on Blackboard at that time, fully caffeinated. Hopefully you will be too, because your exam is administered the same way as your previous exams. So all your midterm exams have been showing up on the left-hand side here. So when you go in on next Tuesday at 7:30 a.m., if you click on your final exam content area here, you will see your link to the final exam that is remotely proctored, just like it always has been. Only difference here is it's a comprehensive exam. It's got 50 questions. It's still use the calculator online, et cetera, et cetera. So we'll talk a little bit more about that. In the meantime, if you I recommend strongly that you go through the review notes, which we'll talk about today, but you'll want to download the review notes just so you have like a guide to sort of tell you where to focus your time and attention. We've gone through so many learning objectives in this class, like 49 different learning objectives. So, I'm not testing you on every single learning objective, only certain ones, which we'll see here. Comprehensive exams are there up on, practice exams are up there on Blackboard too, so I recommend you check those out. Please also, while you have the time, check your scores on Blackboard. So I have updated all of your scores for all the homeworks, for all the extra credit, and for all the midterm exams. So the only thing remaining is your final exam score, which is out of 100 points. So right now, your points that you've earned to date divided by 400, that should determine what your percentage is that you see on Blackboard. So it is up to date on a regular basis. It shows you your grade as it stands currently. Your extra credit points are shown in this area, and bonus points. Bonus points currently, I just sent out an email to all of you. So we're at an 84% response rate. So we need four more students to fill out the course evaluation. And then you guys get 5 extra bonus points. So 5 extra bonus points will be added down here as soon as 4 more people fill out the course evaluation. That's an extra 1% bump. That usually is what people need to kind of get them over the hurdle of the grade that they're trying to get. So in the meantime, check out Blackboard, make sure that all the points for all the homework assignments are correct and have been updated, have been uploaded correctly to Blackboard. Remember, they're all 2 points, and I just multiply your homework percentage times the 2 points to tell you how many out of 2 points each homework assignment you've earned. So those should be up to date. Let me know if you want me to take a look back at anything. I know it's been a lot, but there you go. And let's see here. We go right here. So again, your final exam next Tuesday. Today is the last day of classes. Let's take a look at the final exam. So a lot of this looks very similar to what we've seen before. Reese, how you doing there, buddy? Let's see here. We've seen over and over again that we are using Proctorio. So I just want to make sure that we're clear on the rules here. You got to make sure your microphone and your camera are working. So check out the practice exam with Proctorio to make sure all these things are working. You have to have the technological capabilities, as you always have. I know it's been a struggle for this entire term, making sure you've had that, but please just make sure that you get it all set up and there's nothing getting in the way of you being successful. So nothing I can do if you have technical issues. No personal calculators allowed. I can't emphasize this enough. If I see you guys using a personal calculator, I'm just going to automatically give you a 0. That's just the rules that we've been implying throughout the past 5 midterm exams. You know it, so don't make the mistake of using anything other than the on-screen calculator. No electronic devices are permitted at all. If you have any questions about what's permitted, come see me or check out the syllabus. The list of items there is pretty clear. No electronic devices around you at all. So you don't want to make that mistake. Trust me, it's 100 points, and it's a significant portion of your grade. Same thing as before, though. Your scratch paper, it's just 1 page. You will only need 1 page of scratch paper, even though there's 50 questions. Yeah, there's more. But honestly, most of these are concept questions. So you don't really need more than one piece of scratch paper. A lot of you haven't really been using your scratch paper. I strongly advise that you do that. Practice writing things out, especially for the statement of cash flows. I think you need to see it in order to be able to answer questions. You still need to show your scratch paper at the beginning of the exam. Hold on to your scratch paper in case you have any questions. Most people don't. Usually when the final exam is over, they simply say, all right, peace, I'm done. They usually just ask me when I'm going to update the scores on Blackboard. And that's fair. I do need to go through and see after you guys after you complete your final exam. I need to go back and see what sort of point adjustments I need to give you upwards for any midterm exam replacement. So again, remember that your percentage on the final exam, it must be greater than your lowest of your midterm percentage, lowest. Okay, so if you scored an 80% on the final exam and your lowest midterm was say 50%, what I would do is say, instead of giving you, that would be, was it 30 out of 60, right? That would be your midterm score. What I would do is simply say, no. I would say, what's 80%? In that case, that would be, I believe that's just 42, or was it 48? I can't even count today, 48. I would give you 48 out of 60, or I would just give you essentially an 18-point bump. Bump. You'll see that when you'll see that on Blackboard, and I'll send an email to let you know if you had a bump for any type of midterm exam replacement. Essentially, I'm not exactly just erasing your midterm exam. I'm just going to say, hey, if you had 30 points, I'd give you an extra 18 to essentially give you, which equates to essentially an 80% on your midterm exam. So that will all be made clear once your final exam is over with, and you'll want to check that math too. But essentially, that's not erasing for something. There we go. Come on, computer. So how many questions are there on the exam? Well, there are 50 questions worth 2 points each. There are no extra credit points in the final exam. Final exam is what it is. You just want to score as much as possible. The good news is each question, even if you miss a question, it's not hammering you 3 points. It's only going to hammer you 2 points. So that's a good thing. 150 minutes, you still get your standard, not midterm exam time, but your final exam time, my bad there, final exam standard time is 2.5 hours. So you'll get that on your, so take your time is my number one recommendation. I know most people just want to get it over with, but I don't want you guys, I think a lot of you know by now, you got to pay close attention to the details, dates, things like that, which we'll go through again here. I just don't want you guys missing any points in this final exam. So no makeup exams in case of extreme emergencies, technological issues. Sorry, folks, if something's not working on your end, I can't do anything for you. So make sure that there's no problems. All material from textbook, lectures, homework, testable just as usual. But what in particular do you need to go back and focus on? Well, just going to give you a general breakdown of the rigor here. Conceptual questions, that's a huge percentage, 55%. So a lot of these are, what is, conceptual questions could be something as simple as what do we need to do at the year end to account for any depreciation, or what are adjusting journal entries in general, things like that, definitions, concepts, things. By now, a lot of those things will stand out to you. These are not very intensive questions that I ask you. A lot of these things will seem almost like common sense. And the reason why is because you guys have been doing the homework. You guys have seen all the different ways I can ask you these questions. All these things are just kind of recalling the tools that you've been using over and over again throughout the past 15 weeks. So those aren't too difficult. Calculations, obviously, there's going to be some on there, but nothing that you cannot do or accomplish. And like I said, you've done a lot of this stuff before, so really at the end of the day, it's about knowing the procedures. What are the journal entries? How do I even get started on answering this question, right? So down below, what I've kind of done is I've given you a little tick mark next to each learning objective. These are the learning objectives that I'm going to test you on: 1.2, 1.3, et cetera, et cetera. So I'm not necessarily testing you on every single learning objective. That's ridiculous. So these are the core ones you want to focus on. So you can see from back as far as chapter 1, there's two concept questions because there really wasn't a whole lot of math or procedural type questions there. Chapter 2 is when we start seeing a lot of different information about how to apply debits and credits, what are debits, how are they used, etc. So, I don't necessarily need to test you on those type of basic journal entries. The journal entries that you really need to know are down below where you see the procedural type stuff. So we kind of got into, in chapter 4, when we looked at the bank reconciliation, there were certain adjusting journal entries that we had to record for any cash related transactions. Let's see here, chapter 5, one procedural question there, 6.1, 6.2. I believe those were a lot of the inventory type questions. So mathematically, do you know roughly how much inventory is left over if we use a FIFO method and we sell off this many items? There was a lot of math and analysis that was going on in the inventory area. Conceptual questions, procedural questions, general for chapter 5 generally relate to bad debt expense, the allowance for doubtful accounts. Chapter 7, chapter 8. Chapter 7 was the when we looked at depreciation methodologies. Chapter 8 was looking at current liabilities. Appendix F and chapter 9, a lot of that was just bonds. Like, do you know which present value table to use, et cetera, et cetera. Chapter 10 and 11, this is like the biggest chunk right here. 3, 5, 7, 10, 12, 16, 20. 20 questions broken down between the new materials. So make sure that you know your journal entries. Make sure you know, especially how to use the indirect method to create the statement of cash flows. A lot of conceptual questions, of course, are mixed in there, but I think a lot of you will be able to, as long as you've been practicing through the homework and been attending classes and asking me questions, you should be fine with a lot of those. So tips, recommendations, same as we've seen before. Review your homework, but related to these particular topics. Ask yourselves why the answers make sense. If they don't make sense, come and talk to me. If you're just looking for kind of like a quick, like mnemonic to help you remember things, I'm happy to give you that stuff too. At this point, our brains are pretty fried. They're full of a lot of information. So just trying to remember little things is a tricky thing to do. So, if you just need some tips on how to remember stuff, happy to do that. But just realize memorization's not enough. You got to know how the stuff is applied, the procedures in general. I'll put some additional practice on my accounting lab for chapters 10 and 11. As far as the previous material, we have review questions from chapters from the first exam through the 5th exam. What I have not finished doing yet is going back and just picking out those questions, those review questions on my accounting lab just for the topics of above. So in the meantime, I recommend just focusing on using Blackboard practice exams to kind of see how well you know the material. Once I get a good set of review questions on my accounting lab, I'll email you guys just so you know what's going on. Take the practice exam multiple times. Now, I've said in the past that usually, you take it like the 4th time, you start to see the same questions over and over again. That's true. That's true. But, the key thing to realize, by now you realize this too, the practice exams are not the sole source of review. Review is coming from looking at your notes, looking back at your homework, and applying it on any types of practice exams or questions I give you. So you have to look at reviews as just sort of all-encompassing. Taking the exam, be mindful of your time. Most people will not have a problem with 2.5 hour time period. You'll have plenty of time. So read slowly, read carefully. Watch out for those for any of you who have pitfalls when it comes to dates or time periods, right? Go back, remind yourself, I need to pay close attention to dates, I need to draw timelines, et cetera, et cetera. Sketch things out as much as possible, especially for the chapter 11 stuff. I think you got to kind of remind yourself, sketch thing, how the cash from operating activities is shown on the statement of cash flow. So sketch things out in a way that makes sense to you. Okay? Practice writing things down also. When you're going through the practice exams and the practice questions on my accounting lab, practice writing down the facts. Note any questions that cause you trouble. I'm still happy to talk to you about your final exam after you're done. Like I said, most people don't, but that doesn't mean after this exam is over with, after the course is over with, I don't want you guys to think that I'm off limits, okay? If you need something from me or you want to talk about your grade, even after the term, I am more than happy to do that. I retain people's information as long as humanly possible. So don't hesitate just to reach out to me, even if it's during the summertime. I'm teaching summer one, so I'll be around. I will be MIA for July and August, most of August, but still be able to, I'll still check my email periodically. So even if you want me to or need me to jump online and do something for you, happy to do that. Okay, so don't hesitate to reach out to me even after the course is done. Let's see here. Exams are not do or die. Okay, so even this final exam, it's just a way to see how much material you've retained over the past 15 weeks. It's a lot to ask of you. But if you've been doing the work, it's just another checkpoint. You've gone through all these different questions, all these different exams, all these different homework assignments. How much have you retained? Okay, going back and reviewing material shouldn't be arduous. It should be something that you can remind yourself just how to draw things out in case you're prompted by questions. Accounting, as you know by now, has always been about doing things in action. You had to see it in order to really understand it. That's why you've been given all the homework assignments, just all the homework problems, just to give yourself a chance to apply this stuff. If you have any questions about your grade, of course, come and see me. Or if you're still worried about like, hey, I've been doing what you've been telling me to do, but it's just still not working, come and see me. Okay, don't hesitate to reach out to me. A lot of the skills, oftentimes I get students coming back saying a lot of the skills that they learned in this class they applied later on in their college career. That's not always the case, of course, but some people say, it's good to know these study tips on how to just get material in the brain to be successful in exam, right? But if it's not working for you, come and talk to me, because this stuff I've seen it from so many different angles that chances are there's nothing wrong with you. If you're struggling with accounting, there's nothing wrong with you. Okay, it's a tough subject. Some people just need to be shown a different way, around the barrier. So just talk to me if you need something. So what it comes down to, the material that people tend to struggle with, statement of cash flows is a huge part of this exam. So when is a statement of cash flow useful or not useful? So we've gone through some concept questions about that. Hopefully you realize by now one thing, that through looking at examples, you can see a major difference between net income on the income statement and cash from operating activities. It's sometimes it can be a huge difference. If you recall me talking to you guys, I think it was on Friday, about how it's possible to have a net loss on the income statement that show positive cash inflows from operations on the statement of cash flows. Statement of cash flows is useful in general just to make sure that managers are using the money appropriately. What's the general purpose of the statement of cash flows? Basically just to give another perspective about a balance sheet account. Cash is king. We know that when we look at the balance sheet in particular, right, there's a lot of different assets, liabilities, and equity accounts, but the ones that tend to be the most complicated, when we look at it year over year sort of comparison, why did these account balances change? We know that cash changed for a variety of reasons. Some of those reasons why we used cash or we brought in cash related to just simply selling pizza or selling tennis shoes. Sometimes we bring in cash from selling old equipment, right? There's a wide variety of reasons why we use cash. That's why the statement of cash flows is needed, because if we compare the change in cash with, say, a change in inventory, we know that the change in inventory is pretty straightforward. We buy inventory, we sell inventory. At the most, we just need a note disclosure in the financial statements, which we talked about. I think it was on last Wednesday when we talked about financial statements and looked at notes to Nike's financial statements. We can explain why account balances went up or down very easily for most accounts, except for cash, because cash is spent for a variety of reasons. Same thing with retained earnings. Retained earnings change because, well, maybe we paid out dividends, but also maybe we had revenues, maybe we had expenses, et cetera. We had to add extra statements to provide context to the information we're seeing in accounting, because there's all different types of transactions that are going on. So more statements provide better information about how certain accounts have changed. What does statement of cash flow show and not show? Well, we know that, for instance, when we look at the cash from operating activities section. Yes, we see things like depreciation, amortization, gains and losses. We see net income up there. We're not changing, we're not trying to provide a cash basis income statement. We're starting off with net income, and we're trying to reverse out some of these, essentially items that affect net income but don't have anything to do with operating activities. So a lot of people have misconceptions about statement of cash flows because they think, oh, it's essentially just a cash basis income statement. It's not. It's just a way of expressing the changes in cash in 3 different ways. Okay, so you do see some items from other financial statements on the statement of cash flows. That's a good thing because we want to show investors how all these different things tie in with the other financial statements. But it's not like it's the same financial statement. It's a new way of presenting information that's more detailed. How is a statement of cash flows organized? You know the 3 sections. Which are the most scrutinized portion of the statement of cash flows? In my opinion, I think that most people pay attention to the cash from operating activities side of things. And the reason why is because investing and financing activities, they change for very simple reasons. That's why the investing and financing sections tend to be pretty intuitive, pretty easy to prepare. It's the operating activities that's the most complex. So investors, I believe, tend to pay most attention to that. How do the various parts of the statement of cash flows relate to the balance sheet and income statement? We just talked about that. How do the certain transactions affect the statement of cash flows? Well, if it involves cash, we know that it's going to affect beyond the statement of cash flows. But there's also some things that are non-cash transactions that affect net income and therefore need to show up on the income statement as something we pull out, reverse out. How is the statement of cash flows prepared under the indirect method? So it's really the difference, the core difference is between the indirect method and the direct method is the cash from operating activities section. All the other 2 sections are the same across both methods, but cash from operating activity starts off with net income and then plus or minus any type of adjustments to net income get you cash from operating activities. Okay, so the key thing to remember is that is the most useful way that investors perceive the statement of cash flows is by using the indirect method. Most companies provide that method, the indirect method, but that's the core reason. Start with net income, make adjustments, get cash basis net income. Given certain types of information, use the indirect method to determine cash flows from operating, investing, and financing activities. So that's just practicing what you've been doing on the homework side, just filling it, taking information and plugging it in the right areas. Stockholders' equity, this was chapter 10. What are the basic rights of stock ownership? I think the not just the basic rights, but what's the one right I can say that is the most valuable? It's the voting right. It's the right to elect board of directors. So remember when we're talking about common stock and how they have one of the rights that they have is voting. They can vote the board of directors. That's a lot like how we vote people into Congress at the state and federal level. Okay, so go back and make sure you understand all the voting rights. Fundamental accounts that comprise stockholders' equity. Usually you just see common stock and retained earnings, or common stock, additional paid capital, and retained earnings. We did talk about preferred stock. We did talk about treasury stock, okay? But the core accounts at the basic level is any type of paid-in capital related to stock issuance and retained earnings. What are the different classes of stock shown in the statement of cash flows? Preferred, common, treasury. We went through those different examples. Which class of stock are you most likely to see in the statement of cash flows and why? Again, I don't see preferred stock that much. Treasury stocks, sometimes I see that, but really only at the major big corporation level. Corporations themselves, when they issue stock, they rarely tend to buy back their own stock. So it's primarily just common. What's the difference between shares authorized, issued, and outstanding? Just make sure you know those. Remember when we start a corporation, we determine, hey, let's authorize something like 25 billion shares, something ridiculously high. How much we actually issue, that's usually some amount that's very, very small. The amount that's outstanding is the amount that we issued minus any treasury shares that we buy back. What's par value versus market value, i.e. the selling price? We went through a bunch of journal entries about those. Make sure you know how to do those. What's the purpose of par value? Generally, I would say that par value is just to provide some sort of like basic value to the piece of paper that's considered a stock certificate. So if we say a penny per share, we're basically saying at a minimum, the company needs to have 1 penny per each share that they've printed out there. It's like a minimum legal required capital amount the company has to hold on to, and be able to compare and contrast common stock with the other different types of stock and equity instruments and debt instruments. Remember, there were like tax implications for those. What are the various dates related to the dividends? So recall there was the declaration date, the date of record, and the date of payment. So make sure you know those 3 different dates. What are the various journal entries for issuing common stock, purchasing and reselling common stock, i.e. treasury stock, declaring and paying cash dividends, small stock dividends, large stock dividends. I don't think there's any question about the large stock dividends. I think it's all just about small stock dividends. Dividends to preferred versus common. So we went through an example in our notes on how to distinguish dividends that we pay out. What are the journal entries? What are the calculations, the analysis for those? So I think that, if you're going back and reviewing our class notes, it kind of gives you a core foundation for what to expect on the final exam. Previous chapters, people say, should I go back and reread the book? I say no. I don't recommend rereading the book. I recommend going back and consulting the book for things that were causing you frustration. But if you're going to go back and look at the book for anything in previous chapters, look at examples. Focus on the examples. What were the journal entries? Write them down. What are the various principles and assumptions using accounting? So that was like some chapter 1 stuff. How are those principles used when it comes to receivables, inventories, liabilities? Remember, when it comes down to recording information, we're using historical cost. When we have to accrue for things, we're using the expense or matching principle and the revenue recognition principle. What information's on the balance sheet, on the income statement, statement of retained earnings, how are the financial statements prepared? So I think that was in chapter, like 2.3 and 2.3 through 2.5. We went through an example in class where we said, okay, we have a trial balance. Now let's create the income statement. Then from there, the statement of retained earnings and the balance sheet. The trial balance is that link between us, all the journal entries and the chaos that we've been recording, and the financial statements that summarizes all that stuff. Classified balance sheets, we're talking about current assets versus long-term assets, current liabilities versus long-term liabilities. Which accounts do we expect to see in long-term versus current? How does the net book value of a long-term asset change over time? So when we talked about we buy equipment, right? We have the equipment account of some value, and you set up an accumulated depreciation to record the theoretical wear and tear. Initially, it starts off at 0, so the carrying value essentially is just the cost, okay? But over time, it shrinks. The carrying value shrinks over time. Why? Because we keep recording depreciation. So by the time all is said and done, we have a credit balance and accumulated depreciation. Equipment has a debit balance. So the net book value, the net book value is going down over time. Eventually, net book value will get down to residual value, whatever we expected the thing to be worth by the time this whole asset's been used up. How is NRV determined? So remember, there's accounts receivable and there's the allowance for bad debts. So the accounts receivable is a debit balance that represents legally what we're expected to collect from people. The credit balance in the allowance account represents how much of that account receivable, those accounts receivable, we don't expect to collect. The net of those is considered net realizable value. Some people get that confused and say, well, net realizable value is the same thing as net book value. Kind of. We have contra asset accounts that we use for long-term assets and receivables, but NRV is something we use for accounts receivable. Net book value is what we use when we're talking about equipment, any type of long-term assets. Shipping terms, FOB shipping versus destination. How do those affect transactions? Well, it depends on if we're buying or selling. Okay, remember that when it comes to FOB shipping, we're talking about when does title transfer. Okay, Does it transfer once the goods are shipped away from the seller, or does title transfer once the goods are received by the buyer? When the title transfers, that's when the transactions are recorded. So if it's FOB shipping point and we're the buyer or we're the seller, we're going to record a journal entry once the goods leave our shipping bay. Or if we're the buyer, we're going to record the transaction once we receive and count the goods at our location. What determines the balance in the cash and cash equivalents on the balance sheet? So remember, there cash is comprised of we had the petty cash, we had the regular checking account. There was also those short-term investments that were essentially 3 months. You lock those in 3 months or less. So if we invest in something and the longest we ever invest in it is 3 months or 2 months or 1 month, that's practically cash. That's a cash equivalent. If it's an investment that requires 4 months or longer to be locked up, that's essentially considered an investment, not a cash equivalent. Which items appear on the bank side versus the book side, the bank reconciliation? I'm not necessarily asking you guys to produce the bank reconciliation, but I am asking, do you know, for instance, the DOB versus, if you might recall this one, Bibs-Nick. I think it was Bibs, Nick with a C or Nick with a K. I forget which one it is. Corrections, Bibs-Nick, DOB versus Bibs-Nick. Go back and take a look at your notes of those. Just make sure that at the very least you understand, you can recall the deposits in transit, the outstanding checks, and the basically any bank errors. Everything else is on the right-hand side. What are the steps in the accounting cycle? So record the journal entry, put it into the ledger, create a trial balance, create the financial statements, all those processes, right? Most of the time we're just recording journal entries, but realize that at the end of a reporting period, you have to do some adjusting journal entries for things like prepaid rent or depreciation expense, right? Passage of time often prompts us to record a journal entry. Closing journal entries are where we basically all the revenues, expenses, any type of gains and losses, all those accounts are basically being emptied out into the retained earnings account. So we just close those out. So go back and take a look at 2.5 for that sucker. How do debits and credits affect the balance sheet for all these types of accounts? So basically, the assets, and I always recommend that you just kind of remember which causes the increase to various accounts. Assets equals liabilities plus equity. So the assets increase with a debit and everything else primarily increases with a credit. So you've been doing this a lot by now, but if you're still struggling with remembering debits and credits, come and talk to me. So figure out something to sort of keep it in your brain. What are the normal balances for those assets? Well, normal balances are based on whatever side increases those accounts. So cash is an asset account, so the normal balances can be debits. But contra accounts have the opposite. So if we're talking about accounts receivable, right, that has a normal debit balance. But the allowance for bad debts, which corresponds to the accounts receivable, that has a normal credit balance. That's a contra asset account. So contra meaning it contradicts or acts contrary to its companion. Be able to calculate market price of bonds given present value factors. I know this probably seems like a long time ago, but recall from midterm 5 when you had those problems where I gave you present value factors, you just had to know which ones to use to do your calculations. That's essentially what you're going to be given again, is these present value factors of a single amount and present value factors of an ordinary annuity. Use those to calculate market price or the proceeds from issuing bonds. Ending inventory, cost of goods sold, the gross profit under FIFO and LIFO. A lot of that was just those examples we worked through in class from chapter, 6? Yeah, chapter 6, I believe. Just be able to go through and write things out. A lot of you guys came back to me and said, how can I sort out this information when I'm doing inventory? I say, draw it out. Come up with a base. So you have this beginning stack of inventory. Then you had, a purchase, and you had another purchase, right? And so the total amount there equated to total goods available for sale. And then the question came down to, okay, what was our ending balance and the amount that must have been sold, cost of goods sold. So sketching things out is what I recommend. I know we did you had some images from the class notes, but be able to sketch it out. Sketch it out, list it in a way that makes sense. I honestly believe that to understand the inventory chapter, it's all about seeing it visually in your mind or drawing it out in a way that makes sense. Changes in cash, accounts receivable, inventory, given certain balances or transaction information. So if we're talking about, say, accounts receivable, right, and I tell you a beginning amount, and I give you an ending amount, for instance, and I tell you, here's how much we collected, right? How much did we sell on account? Things like that. It's basically transaction analysis. I give you enough information, plug it in, do the algebra, figure out what you're missing. The effects on the accounting equation. So if I issue stock, what does that necessarily do to total assets, total liabilities, total equity? One thing, recall that when we do stock splits or we issue, we do any type of stock grants, okay, those things, or stock dividends, those don't affect total assets or total equity. Those are basically just taking retained earnings and just shrinking those down and issuing more common stock. So some transactions will affect total assets and liabilities and equity, some transactions don't. What are the various journal entries, of course, for issuing the bonds at par, premium, discount for cash? Accruing, paying interest on notes payable and bonds payable. So a lot of those journal entries were, if you recall, you'd be debiting cash at the issuance, crediting bonds payable, right? And then I said, leave like a gap between those two. So if we get, say, like $93,000, but the face value of the bonds is $100,000, then we need another debit in this case. And that debit would be to the discount on bonds payable. And we had to sell it for less because people didn't like our interest rate. Okay, so that's a situation where the market was demanding much more than our stated rate. Whenever we're doing journal entries for the interest, we're always crediting cash for the interest that's based on the stated rate. So I think when it was the example, I think we were saying $5,000. But the debit, in this case, to the interest expense was something smaller. I think it was like, one example we had like 4,800 or something like that. And so, no, excuse me, interest expense was, for that example, that was like 50, was it 52, 54, 56, something like $5,200. And so what's the gap that we needed to fill in? Well, that's basically we're amortizing away the discount on the bonds payable for the 200. And the idea behind that is we knew that the discount had some sort of balance, a debit balance of 7,000. But eventually over time, it needed to go to zero. So we were just like 200, 200, 200, until it all the way went down to zero. So going back and recalling those journal entries, I know that's kind of tedious, but that's what this class is all about. It's just being able to write out journal entries. What would the journal entry be for this transaction? And keep in mind too, in case it's not obvious by now, accounting is a language, right? It's a language of business. We're taking transactions. Today we issued bonds, and this is how much cash we got. We're taking a narrative, something that you would see in a press release, and we are using a language to record it. That's all that this stuff is. So knowing journal entries is tedious, but it's no different than trying to learn another language. It just takes time and practice. Journal entries for purchasing, selling long-term assets. Remember, there's sometimes when we're selling long-term assets, we might have a gain or loss. So in that sort of situation, we are debiting the balance in accumulated depreciation, trying to empty that for whatever that balance is. We are crediting the, say, like the equipment account, and empty that out. And then we ask ourselves, did we get any cash for it? If we got cash, we'll go ahead and debit cash, whatever we got. And then whatever's left over is either a debit or credit. If the remaining is if I need another debit to make this balance, that's going to be a loss. Or if I need another credit, it's going to be a gain on sale, gain on disposal, loss, whatever. So a lot of these journal entries, you realize now you don't need to remember every aspect of a journal entry. You just need to know how to get started, right? What are some common things? Did I get cash? That's usually what I start with, as I ask myself, did I get cash? Do I need a debit cash? Did I pay out any cash? And if I start fleshing out the journal entry, pretty soon I can kind of like figure out, all right, where do I need to go? What do I need to plug in? Closing the books, those journal entries, those are closing journal entries. We're closing the books. Remember, we're just emptying out all the revenues, expenses, gains, and losses. So closing journal entries would be saying, hey, we have a revenue account, right? And its current balance, we've been crediting that thing, right? So we have a revenue account with a big balance. Closing journal entries say, hey, debit that balance to make it go to zero. And what's the offsetting journal entry? It's going to be the retained earnings. So we would put the credit over there, and that represents essentially the revenue. So closing journal entries, we're just kind of cleaning house. I think those ones tend to be pretty straightforward. Even if you're not quite sure like the effects, just realize we're emptying out the accounts when we're doing closing journal entries. Accruing depreciation, amortization expense, using that accumulated depreciation account, we're doing the depreciation, amortization. So depreciation, this is a reminder, the cost account, the cost of the equipment, accumulated depreciation, right? And then we have depreciation expense. So anytime we're doing a depreciation expense accrual, we're debiting depreciation, crediting the accumulated depreciation. In the case of amortization, we don't need to use an accumulated amortization. We can just say patents. That's like the cost of the patent right there. And we have amortization expense. We can just go ahead, every time we do an amortization, directly reduce the cost. It's just the cost account. So some people tend to get those things confused. Do we need to use more accounts when we're doing amortization? No, just directly reduce those. But just trying to boil it down for you guys, just to make sure that you can know trying to think broadly from a very high level standpoint. If you know you've seen these journal entries, it's going to click. It's going to be pretty obvious what you need to do for these questions. And most of them are concept questions. So don't freak out too much about what the journal entry must be. Oftentimes I'll just give you 4 different options on what the journal entry must be. You just need to pick one that makes sense. Book side adjustments to the bank reconciliation. So on the bank reconciliation, we had the bank side and we had the book side. And we have the DOB, we had bibs. Oops. Come on, bibs neck. And so if we had anything, for instance, like N was for non-sufficient funds. Okay, what was the journal entry for that? Well, it means we needed to credit cash and debit accounts receivable. So go back and just kind of go back. First and foremost, all of the journal entries will involve a credit to cash. Generally speaking, involve a credit to cash. There are some situations where we actually need to record cash. So if we get, like, say, interest, credit interest revenue, we would debit cash. Most of the time, what we looked at are the complicated ones are the credit to cash. So the debit to cash are, did we get cash, yes or no? Sometimes we do get those automatic inputs into our cash account, but a lot of the adjustments tend to relate to paying out cash for anything that has a regular payment to it. EFT, electronic funds transfer, EFT, that was a credit to cash. That's where you're paying for your Netflix. That's automatically taken out of your checking account at the end of the period. So a lot of different types of topics there. Go back. What I recommend doing is obviously go back and take a look at this, but more detail. One thing you might want to do is go look at your class notes for each one of these learning objectives and see the examples. Look at the examples on your class notes. Look at examples that are shown in the book. Examples are the key things to sort of see visually like how things kind of transpire from an accounting perspective. Some math, some conceptual questions, but it's not meant to be too arduous. A lot of the stuff you'll have seen already before. So